Hey everybody, Economic Ninja here. It's a little tight in here, but I got to get that snap off and say, hey, good morning. How are you doing? It's probably not going to be morning by the time you guys read this, so just forget all that. We're going to be talking about high gasoline prices and how they are here to stay. The fear mongering. We're going to talk about that. We're going to break through the minutia. Is that even the right word? Of all this crap that's being spewed everywhere. And I'm going to talk about a market cycle, and we're going to use gasoline and diesel as an example, okay? And then I'm going to talk about what happened in 2007, 2008. Because we were all there, I get it, but not all of us were investors at the time. So I want to talk about psychology, buyer psychology, investor psychology, things like that. All right, so I'm going to link this story below. We're just going to go over the highlights, okay? This is out of the hedge. It's entitled, High Gasoline and Diesel Prices Are Here to Stay. Fear. All right. Here's a couple points. U.S. gasoline and diesel prices are at record highs and show no sign of falling or denting demand. That's not true. Refining capacity has shrunk dramatically since 2020 due to the I can't even say those words because you know who's listening. Driving fears of a supply crisis. I can say that word. It's looking increasingly likely that the only cure for those high prices would be a recession, a cure that could be as bad as the disease. All right, that's true. I admit. So it says, U.S. gasoline and diesel prices are soaring to record highs nearly every day these days as crude oil prices hold above $110 a barrel. Now, obviously, everybody wants to, blame Russia and them moving into Ukraine for this. But I'm telling you right now, this was a plan a long time ago. As a matter of fact, even before this was even a thought, Goldman Sachs said we were going to see, this is back last June, I believe it was, that we're going to see $100 plus barrel of oil. Okay, so this was in the cards already. Trust me. It's almost like these things are planned. It says right here in this story, we're not going to break all this part down, but it talks about all the blame, right? They want to throw all this blame. But I'm going to address number one, this. U.S. gasoline and diesel prices are at record high and show no signs of falling. All right, that is not true, and this is why. At a certain point, when the cost of anything gets too expensive, what do? You either slow your usage of it or you stop using it, right? And the third thing is you find an alternative to that, right? So some alternatives right now are public transportation, things like that. People are getting squeezed until they can't get squeezed anymore. There's no more juice and they're done. They're completely done. The consumer is done. And this exact same thing happened in 2008. Oil per barrel hit a peak of $137 a barrel. And that was coming off when I started investing in oil wells, and I started investing in limited partnerships, and we were pooling our money together and going out and actually exploring and drilling for oil. Very, very interesting, great write-offs from that, just so you guys know. You have to be an accredited investor to do it, but it's really, really neat way of making money. But you could lose your money really fast too. When I was doing that, oil was around $45, $50 a barrel. And 3 years later, we're seeing it peak at 137. Now, what happened, the reason why it didn't keep going up was because it pushed the consumer too far. And what had happened is, as real estate was exploding and people were buying these SUVs that were just guzzling gas, well, that was fine when gas was, let's say, $1.50 a gallon. But by the time it hit a national average, I want to say it hit 327. I don't remember. I don't have a fancy board behind me and notes or a teleprompter. What had happened is people started selling off their SUVs where these things were super expensive. Now they're a dime a dozen. You can buy them cheap. Semi trucks were literally pulling off on the side of the road saying, we can't even make money at these prices. Our margins have been destroyed, right? So what happened was the narrative was too strong. Even people that weren't being squeezed started realizing what was going on and saying, hey, why don't I go get myself a gas sipper car, a little Honda Civic or something like that. And those became in demand. So those actually exploded in prices. But then what we saw is because people started doing things to use less energy, less gasoline or diesel, the prices fell off a cliff. And that is exactly what's going to happen here. Now, what's happening today as opposed to back in 2008 is so night and day different. And the reason why is because we're coming out of literally the world being forced to go home, stay home. You're not allowed to go anywhere. And it doesn't matter if you want to go anywhere because the restaurant's closed. Everything's closed. The hotels are pretty much on lockdown. And my point being is that they sit there and today people want to live, right? So they're getting out. They may have some stimulus money left over. They may have some winnings from their cryptocurrency, things like that. And they're going out and they're trying to live, and they're paying exorbitant prices. I'll give you an example. I'm paying $1,300 to fly from California to Texas, San Antonio, Texas, in about a week to meet you guys, meet subscribers in the Texas area. I'll put a link below to that info. On a Friday. I think it's May 27th. And $1,300. That ticket normally would cost me about, whenever I go to Austin area or San Antonio, it would cost me about $300, $350. That is absolutely insanity to me. But you guys are worth it. So that part I'm not complaining about. My point is this. There's a point where people stop traveling. People stop driving as much. They don't just go out and go for a leisure drive, right? Because the cost of fuel is pinching them. So demand will fall, and literally the prices will fall almost like it's overnight. You'll just be like watching drop. But right now you have, and I'm going to call it artificial demand. This is not normal demand. People wanting to go out and live after they've been shoved into their house for so long and covered up and all that kind of stuff. This is artificial, because this is emotion based. Okay. Now emotions swing wildly to the upside and then really wildly fast, dramatically to the downside. And so you have to see what is happening here. Now, here's the other thing too. Something we've never seen, and this is why people think it's forever: shortages, because of supply chain disruptions, because of geopolitical events, right? So that in the short term, I believe near term, we're going to see much, much higher fuel prices, much higher. Like crazy, like I'll call it right now. I believe that you're going to see $10 for a gallon of diesel in places in this country this summer. Okay. That is going to just send people reeling. But what that does is it makes the collapse that much worse. Okay. And that's why I want to point these things out to you guys. These things are not forever. The $137 a barrel in 2008 is not forever. As a matter of fact, it ended up going down to a median price of between $50 and $60 a couple years later, and sat there really for most of the next decade. I mean, we had fluctuations, don't get me wrong, but really sitting around $60 a barrel was pretty safe to say over the average of 10 years. And then we saw, and again, to the downside, when we saw oil trade at a negative, $37, $40 a barrel, I ended up buying options, a lot of the money options on that. That was great. Something happened that people didn't even believe could happen, and that's oil could trade negative. So why? Because they had so much of it available, they couldn't even give it away. They didn't have enough capacity for it to store it. So, because it's coming out of the ground as fast as, they were pumping it yesterday, they're pumping it today. If all of a sudden you don't need it, it gets really cheap. And I believe you're going to see that. You're going to see that. But the sad thing is, I believe that comes after the collapse of the world's economies. And I believe that comes sometime this year. I'd be shocked if we made it to this time next year. All right. Second quarter of 2023 without seeing world markets completely collapse and be obliterated. So I want to share that with you. This isn't forever. It's not doom and gloom all the time. It's cycles, and we want to be in the cycles, but we want to be ahead of the cycles. We want to be trading those cycles ahead of time or preparing for them. Okay. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.